If gold hits $5,000 an ounce, it won't just be another headline. It'll be a signal, a pulse check on the global economy that says something big just changed. Because when gold moves like that, it's not about jewelry or collectors or hype. It's about trust. And when people start paying that much for a lump of metal that never changes, it usually means they've lost faith in everything else that does. Let's start with something simple. Gold doesn't move fast for no reason. When gold rises, it's usually not greed. It's fear wearing a suit. So if we wake up one morning and see the price of gold flashing past $5,000, that's not a celebration. That's the world quietly panicking. But here's the catch. It won't feel like panic at first. On the surface, you'll hear headlines about record highs, safe haven assets, or hedging inflation. But underneath, the message will be louder than words. Global confidence is cracking. To understand what's really happening, think about what gold represents. It's not an investment in productivity or innovation. It doesn't pay dividends or release quarterly reports. Gold is a mirror. It reflects the value of everything else. When that reflection starts to look distorted, it means something's wrong with the system behind it. Now, why $5,000? Because crossing that mark would mean more than a rally. It would mean the global monetary order, the one built on paper promises, is being questioned at scale. We've seen signs of this for years. Governments printing more money than they can ever repay. Central banks quietly buying gold, even while telling citizens not to worry about inflation. Ordinary people watching the cost of living rise faster than their paychecks. At some point, people stop trusting numbers on screens and start trusting what they can hold in their hands. In 1971, when the US cut the link between the dollar and gold, an ounce cost just $35. Today, it's over $4,000 in some markets, and climbing. But remember, the goal didn't change. The dollar did. Every time new dollars are printed, every time debt piles higher, gold doesn't become more valuable and our money just becomes less. So what happens when it hits $5,000? Well, it's not a random number. It's psychological. Just like a car hitting 100 miles per hour feels faster than 99, gold at $5,000 will make people rethink what's normal. It'll trigger headlines, YouTube debates, late-night talk shows, and more importantly, it'll shake confidence in paper assets. Stocks might start wobbling, currencies might swing wildly, and governments will rush to reassure everyone that everything's fine. But behind those smiles will be fear. Because once the public starts seeing gold not as a relic but as a lifeboat, it means people no longer trust the ship. And here's a little irony. Every time the world loses faith in paper, gold doesn't just rise. It reminds us that trust is the real currency. And right now, trust is in short supply. Here's something funny. According to traditional economics, gold shouldn't even be this high. Interest rates are up, the dollar is strong, and inflation's supposedly under control. So why isn't gold falling? Because we're not living in a traditional economy anymore. We're living in a confidence economy. People used to measure wealth by what they owned: homes, land, businesses. Now it's all paper claims, stocks, digital balances, promises. And deep down, people know that paper can vanish. One bad decision, one crisis, one temporary emergency measure, and your dollars can lose 10% of their value overnight. It's happened before. Gold doesn't depend on that. It's not tied to policy or politics. It's the same everywhere, no matter who's in charge. That's why, even when logic says it should fall, it keeps rising. Because people aren't betting on gold. They're betting against everything else. Let's break this down psychologically. Humans crave certainty. When things feel stable, we take risks. We invest, we borrow, we spend. But when we sense instability, we do the opposite. We seek something that feels safe, something that can't disappear with a policy change. Gold fills that emotional void. So when analysts say gold prices make no sense, what they really mean is people aren't acting rationally. But that's not true. They're acting emotionally, and emotion always beats logic in markets driven by trust. If gold hits $5,000, it means the emotional tide has turned completely. It means people around the world, investors, central banks, even everyday workers are saying, we don't trust this system anymore. And here's the kickers. Once that happens, momentum feeds on itself. People see prices rise, they feel FOMO, and they rush in. Not because they want to get rich, but because they don't want to get left behind. Gold becomes less of an investment and more of a statement. I'm opting out of this chaos. That's when it stops being about numbers and becomes about psychology. Confidence breaks first slowly, then suddenly. And $5,000 gold would be that suddenly moment. Now, let's talk consequences. What actually happens if gold hits $5,000? First, currencies wobble. The US dollar, still the world's reserve, would come under pressure. Not because it collapses overnight, but because people start moving their savings elsewhere. Central banks from China to India would increase gold holdings even more, not out of greed, but to hedge against uncertainty. Second, investors shift behavior. The stock market, which thrives on optimism, would face a psychological shock. High gold prices signal fear, and fear drains liquidity from risk assets. So we could see money flow out of tech stocks, crypto, and speculative bets, and into tangible, boring assets: commodities, farmland, real estate, and yes, more gold. Third, debt gets heavier. When gold rises, it often means inflation fears are back. And that means interest rates could rise again. Governments with record debt would suddenly find borrowing more expensive. The US already owes over $30 trillion. Every 1% increase in rates adds hundreds of billions to that burden. Something has to give, and it usually means more printing, more spending, and, ironically, more fuel for gold's fire. But the biggest change would be psychological. Gold at $5,000 would challenge the core assumption that cash is king. For decades, people were taught to keep savings in the bank, invest in index funds, and trust the system. But once gold crosses that symbolic line, those beliefs crack. People start asking dangerous questions, like, if gold's rising this fast, what's happening to my money? Or, is inflation really under control? That's when the narrative breaks. And history shows, once trust in the system fades, it rarely returns quickly. It took the US years after the 1970s to rebuild confidence. And even then, it never fully returned. So $5,000 gold isn't just a price point. It's a mirror showing us that the foundation of global finance, faith in fiat, is shaking. Here's where things get interesting. When gold skyrockets, not everyone loses. Some people actually win, not because they predicted it, but because they understood how psychology moves markets. The losers are usually those chasing quick returns. The ones who think they're either too late and jump in at the top. The winners are the ones who understand that gold isn't a trade. It's insurance. It's not about timing. It's about protection. So what can ordinary people do if gold keeps rising? First, breathe. Don't panic buy or panic sell. Gold hitting $5,000 doesn't mean the world ends. It just means the rules are changing, and you need to adapt. The easy money era, the time when you could print your way out of problems, borrow endlessly, and still grow, is ending. In its place is a new economy, one that rewards stability, discipline, and real value. Gold is just the messenger. Here's a simple truth. People think they're investing in gold, but gold is really investing in people. In their fear, their patience, their long-term mindset. When confidence is high, gold sleeps. When confidence breaks, gold wakes up. So, if it hits $5,000, here's what happens next. The system adjusts. Maybe slowly, maybe painfully. Governments will scramble to reassure. Some will propose new currencies, others digital alternatives. But trust, the one thing you can't print will take time to rebuild. And until it does, gold stays strong. The lesson isn't to buy gold blindly. It's to understand what gold means. It's not about metal. It's about mindset. It's the ultimate truth serum for financial systems, revealing when promises start losing weight. If gold hits $5,000, it's not just markets that change, it's mental models. Because it forces us to ask a deeper question. What is money really? For most of modern history, we've treated money as a tool of convenience, a digital number, a credit score, a paycheck. But gold reminds us money is also a story, one that only works as long as people believe it. When that belief wobbles, societies shift. We've seen this before in Rome when silver coins got thinner with each emperor. In 1920s Germany when people carried banknotes in wheelbarrows. In Argentina where inflation turned salaries into jokes. Every time gold became the measuring stick for truth. If $5,000 gold becomes reality, it's the world's way of saying the old story isn't working. People will start thinking differently about saving, about value, about freedom. More might look at alternatives like Bitcoin, land, or real assets. Others might rediscover the value of simplicity, spending less, owning less, but owning things that last. It could even change geopolitics. Nations hoarding gold gain leverage. Those drowning in debt lose it. A silent shift in power begins, not through war, but through balance sheets. But there's a silver lining. Every time faith in money breaks, something new is born. After the Great Depression came social reform. After the 1970s, inflation came technological innovation. Maybe this time the crisis brings a more honest economy, one based less on speculation, more on sustainability. Because gold's rise isn't a curse, it's a mirror. And sometimes seeing the truth, even when it's uncomfortable, is the first step toward building something better.